Alright guys, so now you know 4 strategies. This is the fifth. The fifth strategy is called phase line break. It is an advanced strategy. It's one of the more advanced strategies that we have. And its focus is, it's totally different than the other 4, okay? The other 4 kind of line up in a line. You know, you can take an advanced breakout, you can also take an initial breakout, you can take a complete breakout one after another, and even advanced continuation breakout right after that, okay? The phase line break is a momentum play, okay? It's a strategy that can be utilized around high impact news announcements. You know, the type of news announcements that really just cause a massive move in the market, okay? Because the other strategies, they don't really capture that part, okay? But if you want to be a little bit more advanced, a little bit more aggressive, it is a little bit more of an aggressive strategy, you know, because it is focused on high momentum, high volume and very big moves in the market, okay? But it does offer very good opportunities, and it's so simple too. It's very simple, you know? So how do you, let me give you the backstory about this strategy, because with every single strategy I have a backstory. This is, you know, another strategy that I have developed, and it's actually one of the first strategies I have developed. I have developed this strategy back in 2015, okay? And the story behind it was, this was the first month of Live Trader. The Live Trader was a streaming program that I created alongside with Infinite Prosperity that I hosted, you know, and I live streamed my charts with the guys, and I showed them exactly what I was doing, okay? And during that first month, this was August 2015, I've experienced something I've never experienced before. There was a week where I had beautiful watch lists. I had opportunities every single day, okay? And none of them were executed. None of the strategies at that point, I was not able to catch those moves. Why? Because again, there was no pullback, okay? What happened is price action just broke out and just paused a little bit and continued higher. And at the end of that week, I'm like, typically, like at the end of the week, it was just like, okay, what the fuck just happened? Literally, you know, because I looked at every single pair that I had on watch that week, and every single pair went either 200 pips or 300 plus pips in a specific direction. Massive moves. And I wasn't able to get into any one of them, you know, so I'm literally like, what the fuck just happened here? So I spent that weekend digging into it, and every single one of those pairs that I had on watch had one similarity. They had a phase line break, okay? That's what happened. Every single one of them had a phase line break. Now, we haven't really focused much on phase line breaks, so during this explanation, we're gonna be focusing on phase line breaks, what phase line breaks are, what are phase lines and stuff like that, okay? And then part 2 of this strategy lesson, so the next lesson coming up, we're gonna be focusing on the entry and the execution, the stop loss, the target and stuff like that, right? But yeah, so this allows you to really capture the momentum plays. So what happened right after? You know, so I spent the weekend back testing and looking into it, and I figured out, okay, you know, every single one of them has literally some type of a phase line break in the market, okay? And then when the new week started, something happened. There was a period in time called Black Monday, okay? This was the last week of August 2015. You guys can Google it. So August 2015, Black Monday. A lot of momentum, a lot of volume. Market was crashing. The stock market was going crazy, okay? And that week, all I did was just phase line breaks, you know? So the week prior, I missed all the opportunities. Then over the weekend, I started back testing, started looking into it, and figured out how to execute those opportunities that I missed, okay? So I really dug into it. I spent the whole weekend looking into it, and I even went back in time and back tested the strategy. So when Black Monday happened the following week, I was able to practice that strategy for the first time. And I took a few trades. I made nearly 20% that first week. And I'm like, damn, this strategy works. And what I like about that strategy, because it's not very common, to really execute this strategy, you have to sit for the high impact news announcements, you know, such as NFP, the employment data release for the US, or any type of employment data release for any country, stuff like that. Rate announcements, you know, or any other big economical announcements, maybe a recession or maybe an election, you know, maybe a natural disaster and that causes a massive move in a specific direction. This strategy is based around a massive move, a very high impact announcement that causes a big move in the market. Okay, and people, it's always made me laugh because I remember I used to hang out around forums, trading forums specifically, and I didn't really pay attention much, but whenever there was a high impact news announcement, I would just kind of check the forum and see what people are doing. I don't recommend you do that. I don't recommend you even go in any kind of beginner forums, because there's just emotional trading to the next level. But what they were doing is they were trading these high impact news announcements in a way that, they place an entry above and they place an entry below, and they're like, well, if the news announcement spikes up, I'm going to be triggered into the entry. If the news announcement spikes down, I'm going to be triggered into an entry, and I'm going to be able to catch the move. That's fucking gambling, literally. Phase line breaks is not gambling, but that kind of style is gambling. And what I ended up seeing all the time is that we would get a spike up, people would get triggered into the entry, then there will be a spike down immediately right after. They will be closed out of that initial entry, and they will be triggered into the second short order that they placed, and then price action will go back out and even out, and now they'll be either sitting at 2% loss pretty much. And I'm like, that doesn't fucking make sense. There's got to be a better way of trading these high impact news announcements, and I never really knew it until that situation happened to me. Okay, so with a phase line break, when that momentum happens, the beauty of it is that you're not guessing. Okay, you're not guessing where the market is going to go, because the news announcement is going to drop. It's going to give you a direction, a clear direction, in a specific, either to the upside or to the downside, a clear direction, no up and down kind of stuff. A clear direction, either up or down, and at that point, that's where you can execute a phase line break. So that's enough for this intro, guys. Again, it's a very interesting strategy. It doesn't happen too often, except unless if you're going to sit around for the specific news announcements and actually wait and watch and see what happens. Okay, so you got to commit to actually execute the strategy. You got to commit to waiting around the news announcements and kind of be present around that time. Okay, but with that said, guys, let's jump right into the charts and let me show you what the strategy looks like. All right, guys, so let's look at these phase line breaks. So first thing that I want to really do is explain what the phase line is, but also, give a little bit of a description of the strategy itself. The strategy itself, you're going to mainly utilize it during high volume, high volatility periods. So pretty much all the time after like high impact news announcements such as NFP, which is employment data release for the United States, or rate announcements, stuff like that. This is going to come in handy during market corrections as well. This strategy, I keep it at the back of my pocket really for market corrections, like big market corrections or extremely high impact news announcements, that cause a big move in the market. Okay. But this strategy will come in really handy when we have something like a recession, as an example. Chances are strategy 1, 2, 3, 4 will probably not be present during recession. It's going to be a lot of these phase line breaks, and because the market is going to be moving really fast with probably short, just quick pullbacks, So this is when you're really going to use this strategy. So I personally just kind of keep it at the back of my pocket, at the bottom of my pocket, and I don't really use it too often, because to execute this strategy, you have to be present on the charts right after high impact news announcements, so it just requires you to be there for that all the time. Whereas the other strategies you can kind of plan ahead of time. This one you can't really plan ahead of time because you don't know what the news announcement is going to do, so that's why I don't execute this strategy too often, but I've back tested it a ton for years and years and years and years, and it's always the same thing over and over and over again. So it is a really good strategy for those high volatility, high momentum periods, and I mainly just use it for that. So with that said, one thing you need to understand before I dig into the example is phase line breaks. Okay, so that's the basis of the strategy, is the phase line break. So what is a phase line? A phase line is a phase in the market. Okay, so first thing is a phase in the market. So think of a trending market, like right here on the 5-minute chart. Run, pull back, run, pull back, run, pull back, run. Okay, so we got phases of the trend. Okay, so we get the run phase, we get the pullback phase, we get the run phase, we get the pullback phase, we get the run phase, we get the pullback phase. Okay, makes sense, pretty simple, right? So a phase line is pretty much just drawing, connecting the lows and a pullback, you know? That's it. You just connect the lows of a pullback and then break of the phase line break. That's pretty much it. You know, it's that simple. But that's what a phase line is. A phase line is very similar to a trend line, you know, and it's just kind of connecting that pullback together, you know, connecting that run or a pullback. In this case, we're mainly going to be utilizing phase line breaks for pullback opportunities, like connecting the pullback, and then once it breaks, that means the pullback has ended. So once the phase line is broken, it means the pullback has came to an end and a new run is beginning. Okay, and you can do that everywhere. You can do that on a daily time if you want as well. You can really draw them in any kind of environment. You know, whenever the market is trending, you can simply just draw in a phase line. Once the phase line is broken, a new run is beginning, kind of thing, you know? So you can utilize them everywhere. But for this strategy, it's mainly going to be utilized on the 5-minute chart or the 1-hour time frame, okay? Both of those. And I'm going to show you examples for both opportunities, either quick 5-minute phase line break, which is going to happen right after a news announcement. Okay, so this is important. You can write it down. Right after a news announcement, within a few hours after a high impact news announcement, you're going to be utilizing a 5-minute phase line break. Okay, this is important. So within a few hours after a news announcement, you will be utilizing the 5-minute phase line break. If it's a day after the news announcement, you will be utilizing a 1-hour phase line break. And I'll show you an example of a 1-hour phase line break later. Okay, but it pretty much would be like a quick 1-hour pullback and then a phase line break on the 1-hour chart. Okay, so that would be like a day after a high impact news announcement or a high impact kind of move in the market. So that's the basis of it. Now let me explain it a little bit. Okay, so that's the phase line. Actually, one thing that I want to mention about the phase lines is about drawing the phase lines. There's 2 ways to draw the phase line. One way is connect the wicks. You know, just like there's 2 ways of drawing the trend line. You know, you can draw the trend line connecting the wicks, right? Or you can draw the trend line connecting the open and closes. Phase lines is the same, okay? So what's the benefit and drawdowns of each? Okay, so if you connect the lows or the wicks, okay, so the extreme lows or the extreme highs, in this case the extreme lows, so you're connecting the bottom of the wicks. When this phase line finally breaks, that's it. You know, you have a fully confirmed break because it broke the extreme lows, okay? It broke the trend line or the phase line connecting the extreme lows. So that's pretty much like the best thing that you can have when it comes to the break. However, the negative is that this typically happens a little bit later, okay? What you might get first is if you connect the open and close like that, you'll get a phase line break typically earlier. Okay, like we had a phase line break here 5 minutes earlier than if you connected the lows, the extremes, right? So that's a positive. By utilizing the open and close, that's a positive because it will break earlier. The negative is that it might be a false break. Okay. However, if you connect, right? If you connect like this, the extremes, then the negative is that it happens later. Okay, so you're not getting the best price. The positive is that, you know, it's a confirmed break. And there's no other way of drawing the phase line. So once it breaks this phase line, that's it. It's gone, you know. So I typically, you know, this is kind of like the safer way of doing things. However, sometimes It really just depends. I kind of use my discretion when it comes to the way I draw them. Sometimes when I draw like this, it just, to me, it might just feel so low that it's too late. It would be potentially too late to enter, or maybe sometimes it just doesn't look right by connecting the wicks. So I utilize them both, but I try to be consistent. Again, I'm not going to be drawing, just like I told you guys in the trend line lesson, I'm not going to be drawing a trend line doing something crazy like this, where I connect the wicks on one end and then open and close prices on the other. This is not a proper trend line. It's not a proper phase line either. Okay, so it's one or the other. It's either open and close, or it's the extreme lows or extreme highs, period. Okay, so pick whichever one you want. Again, I like to, this one is a better option, to tell you the truth, because it gives you that complete break. And again, that's, however, the other option can be utilized sometimes as well if you require kind of like an earlier entry, because sometimes this break might be a little bit too late. Okay, so that's all you really need to know for that. Phase line breaks, pretty simple. Okay, so now let me kind of explain the basis of the strategy. Okay, so the basis of the strategy is this. In this example, this is a pound dollar trade. In this example, what happened is that I was initially waiting for an entry short right here off of the 1 hour 50 EMA. Okay, kind of like a CBO in a way. And I was waiting for that entry short. However, there was a high impact news announcement, and I forgot what the announcement was. But as you guys see, all of a sudden when I was waiting for that 5-minute break, well, that 5-minute break didn't really occur. It did occur, but it fell so fast that there was no way to catch it. There was no way to enter the position, with a 5-minute break entry. That's it. You just couldn't get into it because of this high impact news announcement that came in and massively caused price to drop down to the downside. Okay, so this gives you a clear direction to the downside. Great, that's exactly what we want. We want a clear direction. I'm going to go over the points, the exact points that you require in a second. But that's kind of the idea. You're going to get that high impact news announcement, and then boom, you're going to get a clear direction. No up and down spike, a clear direction. And then eventually, sometimes it might continue a little bit lower and then pull back. In this case, it kind of gave you that drop and then kind of gave you this 5-minute pullback. So when it comes to the 5-minute pullback, I still, obviously kind of like it when it pulls back to some kind of resistance like 0.38 to Fibonacci, the 5-minute 50 EMA. In this case, it was also horizontal support and resistance on a 4-hour and the 1-hour chart, so you can see here on the 1-hour time frame broke down and then had this quick 2-hour pullback, okay, to this horizontal support and resistance, and then continued down from there. Okay, and in the next lesson, in part 2 of this strategy, I'm going to go literally candle by candle and show you how this played out live. But for now, I just kind of want to explain it to you guys. So, first point that you need to know. Now that you kind of know the general basis of the strategy and what a phase line is and how to draw a phase line, let's talk a little bit about the points, the criteria. Okay, so preferably, what I typically do is every single month, because I know every single month there's a high impact news announcement, and that is NFP, non-farm payroll for the United States. So that's the employment data release for the United States. It happens every single first Friday of every single month, right? And that is one of the the biggest news announcements for that month. It typically causes a big spike in, in every single dollar pair, but typically in every single currency as well. So I typically wake up early and watch what happens during that announcement, okay, during NFP. But what I do prior to that, I will scan all dollar pairs because it's a dollar announcement, US dollar. So I will scan all US dollar pairs and look for best opportunities that will be giving me a reversal in the market, not a continuation. Okay, so I don't want to really focus on phase line breaks that give us kind of like a continuation of that run. Okay, because sometimes there's going to be a news announcement that causes the market to continue in the current direction. Okay, and that is great if you're focusing on like a an extended high volatility period. You will have to do that if you're focusing on an extended high volatility period. And what I mean by that, that's like when there's a market correction and the only direction that it goes is down. There's going to be many phase line breaks on the way down. Okay. What we're focusing here for now is the beginning of the high volatility period. It's right after. It's literally like hours after the news announcement. So what I really want to focus on is not the continuation, it's the reversal. So I want to focus on the pairs that, when the high impact news announcement drops, it gives me a reversal in the market. Okay, it changes direction in the market because now I have a new run or a new pullback, and therefore there's more potential there than a run that has already been going for 10 days. So that's one of the criteria that I do. So whenever I jump on the charts for NFP, before the announcement, I will scan all dollar pairs and pretty much kind of make a list of every single one that looks good. But I will only look to execute the ones that when the news announcement drops, it gives me kind of reversal in the market. Okay, it changes direction. That's what I wanted to say. However, like I said, there's an exception to that, and that is when volatility is extended for days and weeks, such as during a recession. Then there's only going to be one way. It's just going to go down or just going to go up. So there's going to be multiple phase line breaks during that run. Okay, but for now, first criteria is it causes a rejection or a reversal in the market. Okay, change in direction. The next thing is obviously you want some kind of resistance. It helps, So in this case, we kind of had the daily 50 EMA. The trade happened right here. Okay, so we had this breakdown, and then price pulled back, and then I was kind of sitting on this daily 50 EMA. I was looking for, the CBO at this point, this break and retest of the 1 hour 50 and 4 hour 50. So that's what I wanted to execute initially. And like I said, that was kind of bouncing off this daily 50 EMA. So I just wanted a quick play to the downside, just a quick play. But that wasn't an opportunity because it just kind of fell massively, right? So first criteria, the news announcement causes a reversal in the market, changes direction. Second criteria is best when it's obviously rejecting some kind of resistance. That's it, okay? Then the main thing happens on a lower time frame. So I love when they pull back because it doesn't really matter how the intraday charts look, really. Typically it's going to be like at the beginning of a trend. In this case, it was kind of gave us this bounce and then it continued lower. So it doesn't really matter how the intraday charts look like, but typically it's going to be kind of at the beginning of a trend. In this case, it's kind of at the beginning of this 1 hour trend. And what I really want here is for this quick 5-minute pullback to be pulling back to some kind of support or resistance. Okay, so in this case 0.38 to Fibonacci on a 5-minute chart, the 5-minute 50 EMA, that's the basis. Okay, that's kind of the minimum that I look for. However, what you can also have is obviously it's nice to have some kind of horizontal support and resistance or a trend line on a higher time frame such as the 1 hour or the 4 hour. And you can see here on the 4 hour chart we have this horizontal level and same level on the 1 hour chart, and price action kind of broke down during that high impact news announcement and gave a quick 2 hour pullback. Okay, and then as this pullback is happening, you're pretty much drawing your phase line, and then once the phase line breaks, you go short. And again, I was targeting the previous lows here for 2%, and the stop a little bit above that 5-minute 50 EMA. I'll talk about more about the entry, target, stop loss in the next lesson. But this is kind of it. I really just wanted to touch on what the phase line break is, how to draw a phase line, and just the nature of the strategy when you're going to be utilizing it. So just to kind of give a quick recap, this strategy is mainly going to be used during high volume, high volatility periods. Typically after high impact news announcements like rate announcements or NFP or recession or any other kind of high impact movements in the market. Okay, that's when the strategy is going to be utilized. So the 5-minute break, okay, The 5-minute phase line break will be utilized within a few hours after that high impact news announcement. A 1-hour phase line can also be utilized the day after a high impact news announcement. Okay. One thing to look out for, look for a reversal in the market. When the news announcement drops, look for a reversal in the market rather than a continuation. There's nothing wrong with a continuation. They will work too. But if it's a reversal in the market, it will give you more room, more potentially a farther profit target. Because if it's a continuation, then it's already been going up for, 5-10 days. If it's a reversal, then this is the first day of a trend change, or a pullback or a start of a new run kind of thing. So that's why I focus on that. And that's kind of it for this example, so it's a simple strategy, and literally the reason why I created it is because there needs to be a way to catch these movements, because there will be many different high impact news announcements that, strategy 1 to 4 will not be able to execute. So I really wanted to create a strategy that executes, those rare examples when, the other 4 don't. And this is it, so it's like I said, I don't use it too often. I keep it at the bottom of my packet and just kind of pull it out when necessary. Okay. But that is it for this example. Let's have a look at the next example. All right, guys. So in this example, we're going to be looking at another. This is a big trade. This is a big phase line break for 2.7%, but it was a massive drop to the downside, as you guys can see. So this is a very clean one, and it's a very similar idea as the previous example that you guys saw, that it initially started off as a potential CBO. This wasn't actually a really nice CBO, a complete breakup. So let's kind of go over it real quick. And again, I'll kind of go over the main points and the main criteria. So this news announcement, what this was a rate announcement. Okay. So that is what ended up actually causing this massive drop to the downside. That was the rate announcement that day. Okay. So before I dig into the intraday charts, let's have a quick look at the higher time frame. So again, phase line break, like I mentioned, that I really like phase line breaks when they give us a reversal in the market, meaning that, if this went up, I would not be really interested in this trade. So if the news announcement went the opposite way and price action started to explode to the upside, I would not have been interested in this position. Unless this was like a recession, then yes, but, personally, I like it when it gives me a reversal in the market, like in this case, news announcement dropped and it kind of reversed. It started this massive pullback to the downside. Okay. So that's what I really like about it. And initially it started off as a CBO when price action was just sitting right here. It was kind of reversing. When it broke down right here, that was the CBO setup that I was looking to execute. Okay. So that's it. That's it. That's the only really criteria on a higher time frame, is that you're looking for that reversal in the market. At least that's what I look for. The main criteria really drops down on the lower time frame. So then when we start looking here on the intraday charts, you can clearly see that this was a beautiful CBO. Price action on the 4-hour time frame was riding within this wedge, within this channel really. Okay, we haven't talked much about channels, but channels is when you have 2 lines, going like that, and the market is just kind of within this channel. That's about it. It's just a trending market. And then when the bottom trend line was broken, that also broke the 4-hour 50 EMA. So right away, this is a beautiful CBO setup. Same thing on a 1-hour chart. You look at the 1-hour time frame, you have the same trend line, price action is riding it, and then all of a sudden, beautiful break to the downside and a retest. So again, a gorgeous, pretty much a perfect CBO setup. But as you guys saw, at the beginning of the day when the CBO was happening right here, that's when the volume started to spike to the upside, but that was the rate announcement, so I don't really like to execute right on the rate announcement because I have no idea what the fuck is going to happen. Price can go up or price can go down. When you're literally executing exactly on a high impact news announcement, like a rate announcement, that's an extremely high impact announcement. Price can go either way. It's pretty much a 50-50 shot because it can easily kind of break down, and then you can see here it started to spike randomly a little bit, and then it continued lower, but it can easily break down and reverse and continue going up. So when entering kind of like right around the rate announcement, I like to kind of sit on the sidelines and see what happens. So in this case, I was sitting on the sidelines, and so it ended up dropping to the downside, and I thought, okay, I missed the trade. It's not going to happen anymore. And if I didn't have this strategy, this phase line break strategy, then yeah, it would have been a missed trade because there was really no way to catch it unless you really wanted to trade right on the news announcement, which is very risky. It's pretty much a 50-50 shot. It's a gamble, and I don't like gambling like that. So then I waited, and then price ended up dropping, accelerating to the downside. And now we have a clear direction. Okay, so that's what we want. We want acceleration and a clear direction. We don't want some indecision. We don't want a spike down and a spike up. We want a clear direction in the market. And then it did happen. Okay, and then that gave us the initial pullback here, 5-minute pullback. But the initial pullback again didn't really offer a very good entry because it just right away when it broke, it just smashed and started accelerating to the downside, right? So this was another news announcement right here. So now we had two news announcements that were really pushing price, accelerating price to the downside. So then we finally got some breathing room. Price started to pull back, and it was a decent pullback, nice phase line, and it came to very close to 0.382, not really hit 0.382. That's the thing, sometimes it will retrace, sometimes it will not. In this case, I just want a good looking pullback, and this was a good looking pullback. It came a little bit short of 0.382. That's okay, but once it started to break down, you can kind of see here that I was still being a little bit patient, because when it started to break out of the phase line, it was just moving sideways, right? I wanted to break and kind of move down. So then once it finally kind of started moving down, right there I went short. Okay. And the plan here is that because it started accelerating so much, when you look at this daily time frame, it was just kind of dropping. So when it started accelerating so much, my plan in this case was that I'm going to let it ride as far as I can till the 1 hour chart looks like it's beginning a pullback. Okay. So sometimes it might be forming like a low test, and I'll shut it down. Okay, it's really handy that way. When there's high momentum, you can really, like in the previous example, I had a profit target set because it was just easy support, right, on the lower time frames. But in this case, there was just nothing here, on the 4 hour chart or the 1 hour chart. Like previously, there was that lower previous low, but here it was just a fresh breakdown. A brand new trend was just created. So this can go very far potentially. If it's an extremely high impact announcement, it can go very, very far, So I just wanted to let it run till I believed that the 1 hour chart was beginning a pullback. And it was exactly at this time right here, which was almost right at the end of the day. There was 1 hour left in the day when this 1 hour candle closes, this bullish candle. The 4 hour chart was closing like this, as a potential low test. At that point, I took my profit for 2.7%, right? So I'm going to talk more about the entry, the stop loss, the target later in the next part 2 of this lesson. But for now, let's just kind of focus on the criteria again. So I gave you a very quick kind of rundown, of this setup. But let me chat a little bit longer now. So going back to the higher time frames, right? And I mentioned that it's extremely important to, at least for me, to take the trade when it's reversing, when it's giving us a pullback or a brand new run. Okay, in this case, it was a brand new pullback. Now, the only exception to that is, and I mentioned that in the previous lesson, is that if we're in like a recession period, which the last recession was 2008, so who knows when the next one is going to be. But if we have like a recession type of period where, the market is just exploding, maybe it's just kind of exploding to the upside and continues to go and go and go and go, or maybe it's just exploding to the downside and continues to drop, there's not going to be many pullbacks during that recession period, but there will be small intraday pullbacks. And during those small intraday pullbacks, there's going to be a lot of phase line break opportunities. okay? But that's something to experience. That's why I created this strategy specifically for that type of purpose, But we're not currently in a recession. So the next best case scenario is I like to still execute at the beginning of a pullback or a run. So every single one of my strategies, whether it be the advanced breakout, the IBO, the CBO, or the ACB, they're all kind of at the beginning of a run or a pullback. They're not five days in, 10 days in, 20 days in, into a run. They're right at the beginning, okay? And because they're right at the beginning, to me, that gives them the highest strike rate, the highest probability that it's going to go in my favor, okay? And I want to trade with probability, with the highest probability. So it's the same for this. The reason why I focus on at the beginning of a kind of like a reversal in the market, I want the news announcement to give me a reversal in the market like this. That's because I like trading the beginning of a pullback or the beginning of a run, rather than these overextended and continuation of these overextended runs. I will only do that, like I said, if we're in a recession kind of thing, to make sure to take the whole advantage of that recession drop. But in this case, I really like focusing on the reversals, okay? The moves, the news announcements that gives us reversals in trends, okay? So that's kind of it from a daily point of view. And from a 4-hour point of view, overall, you still want the setup to be pretty clean. You don't want messy price action or anything like that. So you still want to kind of put all your confluence factors together. And you're seeing here that, both of these setups started off as, a typical strategy. Like this is a CBO. This started off as a CBO. So it's a great setup already. That's the thing, That's what I love about this phase line break and utilizing this phase line break, because again, it's already a great trade, like this initially started off as a CBO. Perfect. And then the news announcement dropped and it pushed price in my direction. Now, I wasn't able to catch it because of the massive news announcement, and I don't like trading right before or right during that news announcement, because that's gambling. Price can go up, price can go down. You have no idea. You have no clue what the news announcement is going to bring, So that's where the phase line break comes in, to allow you, to give you another chance to get into that position, to get into that movement, okay? And like in this case, you can see that it started off as a CBO, and the news announcement came and it just started accelerating to the downside massively, right? So then when typically it's the first 5-minute pullback, that you're going to get that phase line break. And like I said, it's within the first couple hours that the first 5-minute break happens. But the first phase line break here, when it happened, that was another news announcement, so I was watching it, but it was another news announcement. You can see it just kind of started accelerating again to the downside. So that wasn't a good opportunity, but it continued lower, it pushed price again in my direction. So then the next phase line break came in, okay? And you can see that there's many phase line breaks here, during this drop. There's a ton of them. You can really start drawing phase line breaks wherever you want them to happen, And the thing is, when the market is trending, when the market's accelerating, it's trending, every single pullback is a phase line break. Doesn't matter if it's a daily chart or a weekly chart or a 1-hour chart or a 4-hour chart, every single pullback is a phase line break, But here we're focusing on momentum plays, not just a typical trend, but trend with very high momentum. And it's a 5-minute trend that you're focusing on. So this is like the closest that you would ever get to a scalping strategy, which I don't scalp, but this is the closest thing that I would consider when it comes to a scalping strategy, trading a scalping strategy. But again, I would only utilize this during these kind of high volume, high momentum periods to make sure I get into this beautiful position that I was initially looking to get into, like the CBO. So with that said, we have the momentum, we have the rejection in the market, right? So the market is reversed, it was in this bullish run, and then the news announcement dropped and it reversed. It actually already started reversing prior to that. But that's great. That's exactly what I want. Check mark, Then intraday charts look great. They're my favorite. They're pretty clean, so that's the thing. I want everything to look clean to make sure my technical analysis still lines up, and this started off as a beautiful CBO. So I already know the strike rate on the CBO is great, So in this case, I just wasn't able to catch it, but then the news announcement dropped, started pushing price in my favor. Okay, so the number 2 is when the news announcement drops, it needs to give you a clear direction in the market. Okay, you don't want it to be indecisive because sometimes it will give you a spike down and a spike back up. You want a clear direction in the market. So when the news announcement drops, it typically will do that when it's a significant announcement. Sometimes like when NFP, when the employment data drops for the United States, and it might just be like meeting target, meeting expectations. But if it's like way above expectations, that's when you're going to have a massive move. Or way below expectations, that's when you're going to have again a massive move. But when the employment data drops and it's what people expected, it's not going to really be that significant, So I wake up almost pretty much for every single NFP, I'm here on the charts for every single NFP. So the first Friday of every single month, I'm here waiting for phase line breaks, seeing if anything happens. But a lot of times, nothing. Why? Because it's just meeting expectations. So it's not giving me these momentum pushes, Once in a while, it's going to like really either just totally beat those expectations or, not meet those expectations in a big way. And that's when that news announcement is really going to cause a massive move in the market. Or rate announcements, like all of a sudden a country increases the rate, the currency rate. And that, if it's unexpected, then that can cause a massive move in the market. So it's stuff like this, it's really when it's kind of unexpected, because if people are expecting it, if people are expecting a rate increase, it's already priced in and it might not react that way, But if it's unexpected news, if it's unexpected result, then that is when I like to focus on phase line breaks, because that is when it's not priced in and price is really pushing and people are panicking, but we're not panicking, we're executing in a proper way, and that's what I like about it. When there's panic, there's opportunities because there's high volume, high volatility, but we want to make sure that things are going in the proper direction. And in this case, it is going in the proper direction, right? So then you get the pullback. And again, I want the pullback to be pretty good, somewhere close to 0.3 to Fibonacci. I like it when it goes like to the 5-minute 50 EMA, but if it's very strong, like it's going to be, that would mean a massive pullback. And it typically doesn't give you that, So a lot of times, like I'll say straight up, it will not pull back to that 5-minute 50 EMA because there's just so much volume, so much momentum that will give you a quick pullback. But I like it, if it just kind of comes close to that 0.3 to Fibonacci retracement, or maybe some other, sometimes it might be like a 1 hour horizontal level, or sometimes it might even be like the 4-hour 50 EMA. Sometimes it starts off as an IBO and then it breaks down and pulls back to the 4-hour 50 quickly. That might happen. So I just really wanted to give me like a clean pullback and then a clean break. Okay. And that's kind of it. So it's pretty simple, pretty straightforward. Again, it's a discretionary strategy and utilize it once in a while. But like I said, it's very rare that I execute it because it has to be a big high impact news announcement. Otherwise, I'll just take my IBO or take my CBO, period. Those are the safe strategies. Those are the simple strategies. They happen the most often, the advanced breakout included as well. But this phase line break strategy, like I said, it's great for these specific moments, And in this case, it was a beautiful CBO. I wasn't able to take it. Boom, news dropped, caused a lot of volume, caused a lot of momentum. Phase line break, was my choice to execute this position. And that's it, So that's all you really need to know. In the next part 2 of this strategy, I'll be again talking about the entry, stop loss, and target. So with that said, guys, let's have a look at the next example. Alright guys, so in this example, I'm going to show you a phase line break on the 1 hour time frame. Right, so in the last two examples, we saw what a phase line break looks like right after the news release. Okay, right after the volatility spike, literally within like 2 or 3 hours. Well, this is going to be an example of a day after, so in this example, what happened was NFP happened on, this is a dollar CAD position. So NFP, the non-farm payroll, United States employment data was released on Friday, okay, which was right here. That spiked to the downside. And we can even see really quickly right now, we didn't really have a phase line break. You can see that was just a massive drop. And when it finally pulled back, it was, it could have been a phase line break right here, and it would have kind of worked out to the lows and then eventually continued. But, because it was kind of happening later into the day. So it's tough when it drops a lot, on that 5 minute time frame. You want it to kind of drop a little bit and then pull back a little bit closer. This kind of had a massive drop, and then when it finally pulled back, it was still good, but I didn't take it at that point. I waited till the 1 hour phase line, which this is a great opportunity as well. These 1 hour phase lines, because the 5 minute phase lines, they happen, like I said, right after, but sometimes you're not on the chart, sometimes you cannot catch it. But the volatility typically continues. As long as it was like an extremely high impact news announcement, the volatility can continue until the next day and even into the next week. Sometimes even if it's a recession, it will continue for a few months. So this was taken on a Monday. So NFP happened on a Friday. It caused a massive spike to the downside. And then volume died pretty quickly. And then it was the end of the day. And then the phase line break on a 1 hour chart happened London session on Monday. So we're going to look at this in a little bit more detail. I'll again cover the whole analysis, but let's have a quick look at the higher time frames here, just to give you guys a kind of full idea of what was happening here. So monthly chart, not much really going on. We're kind of bouncing with the 20 EMA, so nothing crazy. Weekly chart, this is kind of where it begins. So I was keeping an eye out on this setup because I was sitting and rejecting the weekly 50 EMA. So that was great. It's stalling, I was rejecting the weekly 50. That's giving me resistance. It's a break and retest. So this is acting as resistance and therefore a continuation to the downside. Then on the 1 hour time frame, this is where the trade happened, right? So this, we kind of went up, and this, so you can kind of imagine this being an ABC pullback, so we have this wave 1 breakdown, a quick wave 2 pullback, wave 3 run, okay? Let's draw in the extensions. I didn't even draw them in, but let's see how they line up. I'm curious. And this one was an extended run, so just continue to drop, they even stall at the extensions. So sometimes when you're talking about Elliott wave extensions, some runs are just extended and they will just continue and continue and continue and continue, and so sometimes the extensions don't work. Sometimes they work great, sometimes they don't work because the runs are just overextended, like in this case. And then now we had this pullback again, and this looks like an ABC pullback, and then a wave 5 continuation to the downside, right? So this is kind of what this looks like to me. So then when this was taken again right here on Monday, right? And then NFP happened right here. So that was the volatility push to the downside. It's not that big. Sometimes there's a larger candlesticks that we have, but this was the NFP volatility push to the downside. Okay, kind of gave us a break and started to break back down and beginning that wave 5 run as it was bouncing off that weekly 50 EMA. Right, so that's my analysis. So NFP gave me what? It wasn't a continuation, didn't continue going higher. It gave me that rejection, it gave me that reversal in the market or the change in direction. Okay, so I got the change in direction. Great, and we get the higher time frames on our side, even better. So this is great. It's looking like a great opportunity. So what was I targeting? Well, I was kind of targeting the previous lows. Since it's a wave 5 continuation, there's really not much going on in this area, so I was targeting the previous lows. I ended up shutting it down earlier though. So that's kind of the plan. That's kind of how I approached it. And then from an intraday point of view, what happens is, again, this starts off as a CBO, so started off as a CBO. But what happens a lot of the times, let me spend some time explaining this, is when we have these high volume, high volatility explosions to the upside. So what happened here is when the NFP was released, it wasn't that good, let's just say that. It was not up to, it didn't meet the expectations, that was supposed to meet the estimations. So it had this very violent kind of quick drop to the downside. And when you look at the 5-minute chart, like that's a big drop on a 5-minute time frame. Let's actually measure it out. I believe that's a drop of 200 pips. That's almost 200 pips in an hour. So that is a big drop. 200 pips is a lot, So that's what I mean. Like when this pullback, it was already dropped so much initially that, that day there wasn't much more left to go, because that 200 pip drop, that's a big drop. So when it finally pulled back, the thing that you gotta understand is that if the volatility continues, it's never going to pull back to that 1 hour 50 EMA to the 4 hour 50 EMA for that CBO. You would want it to. We always want it to pull back as far as possible, but it's not always the case that it's going to pull back. In this case, it broke a decent trend line on the 4 hour chart and the 1 hour chart, so it has like a perfect breakout. It really just broke all major levels to the downside. And then on a 1 hour time frame, let me actually zoom in here onto the entry, just like right there. You can notice that again, it started this pullback during the Asian session. So during New York on Friday, end of the day, kind of bottomed out, low volume again started to drop after that NFP announcement, right? So right away, it just kind of started to bottom out. And then here is end of the day, kind of the weekend. And then New York Asian session begins the following day. And here we had the phase line break at London Open on Monday, okay? And when this break happened, you can kind of see that it didn't retrace all the way to the 1 hour 50 EMA and to the 4 hour 50 EMA and to 0.382 and the trend line. That's obviously what we would want. We would want it to pull back all the way here. But the thing is, with these high volume, high volatility trades, a lot of times they don't. This is actually the reason why I developed this strategy. This is what happened. Okay, so remember when I told the story, the introduction of part 1 of this phase line break lesson? Okay, so in the previous lesson, in the introduction of that lesson, I mentioned why I created the phase line break strategy. And that happened in 2015, August 2015, when there was a lot of volatility, a lot of volume, a lot of momentum in the market at the end of August 2015. And I had many examples exactly this, like literally exactly this, perfect breakdowns. And I had orders placed. A lot of them I had orders placed at 0.32 Fibonacci, the 1 hour 50, this region. So imagine waiting for an entry here or having an order placed on like a few beautiful opportunities like this. This one, great daily, great weekly, great intraday breakdown, great trade, So imagine having an order placed and then none of them working out. Okay, so this is literally an example that happened to me over and over and over and over again that week. Okay, then I'm like, okay, what happened? What's going on here? Why aren't they pulling back? They're beautiful setups. Typically they pull back perfectly, trigger me in and go down. So what's different here? So I started digging into it, and then I realized, okay, well, there's stuff going on in the market. There's high volume, high volatility because of the events that are happening, the economical events. So at that point, over that weekend, I started to dig into all those trades that I missed because I didn't have a way to execute. They never pulled back. And I found one thing. Every single one of them looked exactly like this. It had that quick 1 hour pullback and a phase line break on a 1 hour chart before it crashes back down to the downside, or to the upside. And this is it. This is literally an example of why I created this strategy. It's for this purpose. Okay. Now understand this. It's not going to happen all the time, and typically I also miss a lot of phase line breaks because I still wait for that pullback, and I don't take the phase line break because I'm waiting for the pullback and it just never happens, So understand that it's a little bit more risky, but it works really well during these high volatility periods in the market. Okay, so just make sure that you do understand that. Make sure that you do wait for these high volume, high volatility periods, and you don't just take a random phase line break here and there. You don't want to take random ones. You really want to be sure that the volume is going to continue. And the one thing that you can be sure is that you can obviously wait for an entry around this area, but if you get like a volume spike and all of a sudden it starts breaking the 5-minute 50 EMA. So let's see here, because obviously here I was kind of waiting for that pullback. I was still waiting for that pullback in case it obviously rejects the 1 hour 50 and I'll get in at a better price, with a better stop protection. But what if it doesn't? At this point I'm like, I know how to react because I studied this. I went over it over and over again. I back tested it for years, like years back. I looked at the data, back tested it, and it's a great strategy, and it works. It has always worked. So I know how to execute, but I was still waiting, for that pullback when this setup originated. But what made me take the phase line break instead is you can draw the phase line on a 5-minute chart. You can obviously draw it on a 1 hour time frame, but I'm not going to wait for a 1 hour breakdown because again, my entry price is not going to be that great. So the one thing with the 1 hour phase line breaks, take the 1 hour phase line and put it on a 5-minute chart, and then when you kind of get a clear break to the downside, on that 5-minute time frame, you are entering on a phase line break. It's just you're getting in at a better price, instead of waiting for a 1 hour phase line break and entering at the close of the 1 hour candlestick. In this case, if you toss that 1 hour phase line and toss it on a 5-minute chart instead, what you're actually going to get is when that breaks down at a high volume, again, you want to see that volume spikes up, and you can see that all of a sudden just boom, it broke down here. So to me, that was a phase line break, and utilizing the phase line but tossing it on a 5-minute time frame like this, so it's the same line, literally the same line, just on a 5-minute chart, and by doing that you can make sure that you still get in at a decent price, because sometimes those will just break that phase line and will just continue to go down, and you're not going to catch it if you're going to wait for a 1 hour candlestick close. Okay, so this does help if you toss your phase line on the 5-minute time frame, and it's kind of like drawing a trend line. That's all it is. It's literally just drawing a trend line on a 5-minute chart. That's it. So this is when it was taken, but the thing that you're going to wait for is, because again, you can wait for that entry off of 0.382, 1 hour 50 and such. But like I said, the difference is the volume happened, the news happened on Friday. Okay, so we had a lot of high volatility on Friday. Then it was the end of the day, so volume was low. Then it was, Sunday and beginning of Monday, the volume was still low. And then initially when it started to spike back up again, check it out. So volume died, and then when it started to spike back up again, the first time we didn't get a pop to the upside. If we got a pop to the upside, then you'll be waiting for the rejection of 0.382 in the 1 hour 50. But instead, volume spiked up, got a little bit crazy, and then boom, broke the 5-minute 50 EMA to the downside. And that was an indication of a phase line break and of a phase line entry. Okay, this is how to execute that 1 hour phase line strategy. Okay, the 5-minute one, a little bit different, obviously, because we're already playing with the volume, playing with the volatility. With the 1 hour phase line break, we want to make sure that the volatility is still there. Okay, because again, it's the next day, or sometimes it's 2 days after, but typically it's the next day. So we still want to make sure that the volatility is there. So it's nice to wait for these volume spikes, and then boom, the break to the downside on the 5-minute chart. And when this broke, I went short, and we'll talk about the entry, stop loss, target in the next lesson, in part 2. But in this part 1, again, I just wanted to kind of explain this, so I think actually at the beginning of this trade example, I mentioned that was referring you guys to part 1. No, this is part 1, so I was just referring you guys to the introduction of this video. But in part 2, I'll focus more on the entry, stop loss, and target. Okay, but this is what it looks like. This is what a 1 hour phase line looks like. So know it, study it, know the pattern, and just keep it at the bottom of your pocket, like I've been saying, and pull it out when necessary. Don't pull it out too often. Still know that the IBO, the CBO, and the advanced breakout, the ABO, those are the most common strategies. You're going to be utilizing them the most, okay? Those three. The ACB is great, but it doesn't happen too often. But it's a great setup to catch the wave 5 on a lower time frame, And this is a great setup for those high volume, high volatility periods. And there's, like I said, 2 ways to execute it. It's either 5-minute phase line break right after that news announcement, or right after the drop or the crash, or a 1 hour phase line break the following day, or both. You can do both. I've done both before. I've taken 5-minute phase line breaks, took profit, and then waited for a pullback and took the 1 hour phase line break the next day. You can do both. But just know that this strategy can only be utilized during those high volatility periods. Otherwise, you might get a fake out and price may just continue going back up, stop you out, and then fall down later after a proper CBO. So just really make sure, again, this is a little bit higher risk, but the thing is, one thing to make sure, because this is a little bit of a higher risk, I found that the strike rate is amazing on these. If you make sure that it is high volatility, because of news, I found that my strike rate is great on this, because I'm patient. I don't execute them too often. I'll really wait for those great opportunities and high volume in the market, okay? But the one thing is, try to make sure that you take more than 1-to-1. Don't just take a 1-to-1, like this is a 4-to-1, so I make 4% on it. I've showed you examples of 2-to-1s and 3-to-1s and such, so make sure that the reward risk ratio is also worth it. A 1-to-1 may not be worth it, but if it's more than that, great. And in that case, even if your strike rate's a little bit lower, but you're making 3-to-1, 2-to-1s, 4-to-1s, then you will still end up on profit. Always remember that, So that's kind of it for this phase line break explanation. You should have enough knowledge to actually execute the strategy. The one thing I can say is, if you want to practice it, it's very easy to backtest this strategy, like very, very easy. Just zoom out on a daily time frame and look for big candles. That's all you gotta do. Look for big candles, because when a big candle happens on a daily time frame, typically it's fueled by something. It doesn't happen out of nowhere. It's typically fueled by something. So just zoom out on like a major pair, like dollar CAD or euro dollar or pound dollar or something, and just zoom in, on these high volatility periods. Like here's one big drop to the downside right there. Then zoom in on a 5-minute chart and see what happened. See what happened in that time. So that's one easy way to backtest this strategy, just so just so you can practice. And again, in the next lesson, this is it for part 1. So now you saw 5-minute phase line breaks, and now you saw this beautiful 1 hour phase line break. Right, in the next part 2, I'll focus more on the entries for all of them, and specifically an entry on this one as well, how it played out, the stop loss, the target, and all of that. But that is it for now. So with that said, guys, I will see you in part 2 of this lesson.